Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Tuesday, the 16th of November, 2021, 6:40 p.m. Central Time. Well, I'm going to be holding my live webinar on Thursday, November 18th, 2 days from now. I've sent out the invites twice. Look in your junk mail if you didn't get it. If you didn't want to attend it, I know you deleted it anyways. You can always click up here. At any point, move your cursor while this is playing, and the icon for that will appear. Now, we have an interesting market. You know, President Biden today said that within 4 days, I guess by the weekend, he's going to tell us who his nominee is for the Fed chair. It's obviously between Powell and Brainerd from everything we've been able to ascertain in the press. He might also fill other Fed positions which sorely need to be filled. This would be the stage for him to do all that. And it might be him putting his whole fingerprint all over the Fed. You know, at the end of the day, while the Fed's an independent body, the appointees are political. If they're too far out, it still needs Senate approval. They'll never be gotten there. Ms. Brainerd is so similar to Fed Chair Powell. He might do that, but why? I mean, what has Mr. Powell done to not earn the part? I don't get it, but politics are politics. I think Mr. Powell, and you may not, has done a fine job. I'm of that opinion. You know, whether you want to put somebody in and say, well, I didn't like him, I'm going to see if she can, even though she's of the same school. I get it. I won't argue it one way or the other. I'm not the person that appoints them. On energy markets, a little bit of a back off in early evening trade. We're going to see tomorrow the EIA numbers. The IEA came out today, the International Energy Agency, and I wrote about it in my morning report. Their predictions for the oil. And we got a lot more oil coming on. Are you aware that the Permian Basin oil production is hitting record highs? It ain't, and I'll use that word, it ain't the big boys. It's the ma and pa operators that I told you about, the independents, as I want to call them. They're not little bitty independents. I hope you understand that. They have come to town, and why not? They don't need to make that balance sheet shrink in size. They don't have a dividend. I'm doing it with my company. And my company, we're going to produce everything we can, and they are hitting it. And, you know, at $80 WTI, they're hitting it out of the ballpark. Now, another report tonight came out, and it does a study if President Biden were to release oil from the energy reserve. You know, he might be able to break gasoline 10 cents a barrel for a short period of time, not a long period of time, very short, months. Why do it? It's political in nature if he does it. He needs help. That's why he'll do it. Got it? He needs help. So his Christmas gift to America will probably be doing that. I don't think it's the right thing to do, but that's what I think he'll do. In the metal markets, if you're a student of Bollinger bands, and especially my course on enhanced ones, you understand the setback today. If you don't, retake the course. So simple. When you look at the dollar, up and away. So the dollar's winning, and look what we're at in the euro. You want to go to Europe. I wish it were summer. At a 113 euro, I don't know that, God, maybe 15 years ago I had that equivalent. I don't know. I don't remember. I'm watching what's going on in all the grains. You want to now move to the December coffee. I just missed it, and I'll change that. I've already moved to the March grains, so you might want to do that too. So as we take a look at the S&P, what can I tell you? It's a new all-time high. You're up 0.43%, up 20. I get people writing me left and right. We're not going to get a Santa Claus rally. Okay, I don't know. Do you think I really have a crystal ball? But my bet with money would be that we get it. What's going to stop it down the road? We know that we're pulling sales forward on retail sales. You saw that today. But we're also going to see big sales over Christmas because of inflationary prices. People are going to buy. They might not buy as much in quantity, but they're going to spend more money for what they get, which means total sale volume up. I don't see that as being negative on companies. When you look at the daily bar chart, you can see that the market's gone into a pause. You're just going sideways. The pattern is one of higher lows, higher highs still. That is bullish. The market is over the 18-day average of closes, which is over the 100, which is over the 200. That's all lined up bullish. The resistance is staring you in the face. It's the upper Bollinger Band, and you haven't been hitting it since mid-October. That's not uncommon. So you're at a zone where at any point, for any reason, whatever it is, you can get a correction. Okay, but if you start embedding the slow stochastic again, forget that. You're going to accelerate again. It takes 3 days where you're over 80 readings, the way that I teach slow stochastics, for them to embed, which means lock in a bull trend. Today was, or is, day 2. And I say today being Wednesday trade is day 2. We'll see. I don't know where the market's going to close by the end of the day, but so far it's trying to finish or get itself going to a day 2. That's not the case in the NASDAQ. The NASDAQ's in an uptrend, but overbought. It can easily fall back to the 18-day average. And I want to go back here. All of these markets, you're going to see lost the embedded reading. Now, if they get over the highs that they made on these peaks right through here, and that was November 5th, then my analysis that they're going to first go down to the 18-day average when they lose that would be totally out the window. So keep that in the back of your mind. That ties in with the number here. That ties in with this number. You got pretty darn close to that 18-day average already. And it's going to tie in back there on this number where you can still fall back. So, gun to my head, I was looking for the market to get back to the 18-day average. Bearish, no. Looking at an overall bullish play for it to regroup back there still could happen very easily. In the VIX, the market doesn't know what to do. It is stuck at the 18-day average of closes. The trend is for the swing lines, lower high, lower low. As the market was coming up here, I think I was crystal clear as it was coming up, and I was telling you, I don't think you're going anywhere. There's too much resistance up here to get this market to just clear that over an upper Bollinger Band into that to hang in there. That the odds don't favor it. You know, at the end of the day, that's what charting is about. It's about the odds. You're looking for the plays on paper, patterns that create whatever event or indicators that create whatever event. Well, that was too much, and where did you go back to? I call that the line in the sand. Now, should the stock market want to take off from here, then this market's likely to try to make a run to the lower Bollinger Band at 1463. I want to come back. Shouldn't have taken this off. When you hit that upper Bollinger Band, you know what I tell you. What the pros have been doing recently is if the markets hit a lower or an upper band, they're selling the calls up here, looking for the 18-day average, or selling puts down here to get there. I had a great question that somebody asked me the other day, why puts or calls instead of going into the futures? Ask it during the live webinar, and I'll give you the reason. In the 30-year bonds, the market is under the lower highs, lower lows, bearish. It's under the 18-day average bearish. But do you really want to sell an oversold condition? Go ahead. You won't get a guy like me saying, I agree with you. Same here. Trend down, bias down, could go there, too oversold. How do you correct an oversold market? You generally get a rally or you stall. Either way, why be involved? Dollar index up and over the upper Bollinger Band. Are we going to embed? It takes 3 days of numbers over 80 to be embedded. So you certainly had today. You had Monday both numbers over. You didn't have it on Friday. Tomorrow's the key day. What are the odds of it embedding? It's against it. So for whatever reason, I wouldn't be surprised the market tries to correct. Now, if it embeds, I change gears. I go from this side of talking to you, I go like this. I'm a different Ira right now. Now I'm fully in the bull camp. Right here, the odds favor you don't embed because you don't do it that often. You don't do it every single time. In the euro, look at how you've got the gorilla glue trade. Remember we called it that at the beginning of the year. It's when a market latches onto a Bollinger Band, refuses to get away, and what it's really doing is setting up a new trading range. It broke out of this sideways action, and it's now in the search for coming down the lower prices. And what has it done? You got both numbers under 20. We won't count today. We don't know what that'll do today. Both under 20, both under 20, both under 20. You came in embedded and you're still there. And when that happens, how do I say this other than an athlete took a steroid? So a chart took a steroid. Think of it that way. And you'll get the bounces, but until that red line leaves that 20, I'm taking more of those pills. I'm going to be strong in that direction. In the British pound, you have an embedded reading. To me, this rally, the pros are selling it. I think they're looking for down here. I haven't heard too much how the UK is doing in its discussions with the EU over lots of trade complaints. It's called Article 16. We'll see what happens, but I'm not playing that. The chart action's bearish. Close with the red line over 21. I'm wrong. I tell traders to come out. Don't do that. I think lower prices are still in the making. What has Bitcoin done? It's stuck. It's waving between the upper, the lower band. This is where the pros, and if you took my course, Enhanced Bollinger Bands, come out. Today on the break, come out. Both ends, okay? Learn how to play with that, especially when you're oversold. In the differential between Brent and WTI, suddenly it's going the other way. You've put on in no time at all 50-cent more premium into the differential of the spread. You still have an uptrend in the swing line, but you're staying under the 18-day average of closes. The bias is down. This market doesn't know what it wants to do right here. Same in WTI crude. They're identical. They don't know what they want to do at this point. In heating oil, I forgot to put the arrows on for you, but what you have here is you certainly have the lower lows, but you have a higher high. You're not trending. Remember, we were talking the past few days as you got down. I said, just wait for that first cold snap of weather. It's going to come into America. Will you get one? Guarantee. It's winter. And you'll get a bounce. And obviously the market was listening to what I said, and that gassed it even better. Did I not say this is a very potent combination of support? The first challenge of a 100-day average and a Bollinger Band when you're oversold. And what did the market do? It responded. Somebody was listening. That does not mean you've changed the trend here. There is no trend. You have a higher high and a lower low. So you keep hearing me tell you about this Enhanced Bollinger Band course. Why? Well, listen to this. Welcome. I'm Ira Epstein, and I'm here to talk about my Enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.